Welcome back to the NITE Economic YouTube channel, and today we're going to be looking at how the situation over there in Iran is affecting markets today. So today is March 2nd, 2026, and before we get deep into this video, if you're liking the content, please subscribe to the channel, it's very helpful. And if you're liking the videos, also drop a like, and let's get into it. So today we're going to be quickly looking at gold, oil, silver, and also the U.S. Treasury, the 1 year U.S. Treasury. I won't even show that one. I'm just gonna explain it. So here you're seeing that oil is starting to break out from these lows over here. 55 bucks. It's currently sitting at 71 bucks, and it's interesting because last week it closed at 67 bucks, but it was setting up to, it was working its way up, and probably a big reason for that is because of what has been happening over there in Iran and stuff with this whole war and stuff. And then over the weekend, obviously the war was essentially verified by the US government. So we should see what happens. As of right now, the oil is being rejected by the 200 simple moving average here on the weekly. If oil could recover and close some weekly candles above this 200 simple moving average, then I think, a realistic target would be somewhere around this previous high, lower high, and this previous lower high, so between 87 bucks and 85 bucks. And if it could reclaim that, then I guess the previous high after that would be somewhere about around 95 bucks. And if it could reclaim that, then I think 100 bucks plus would be a next realistic target, but we'll take it one step at a time here with oil. Let's take a quick look at gold. So during times of uncertainty and doubt, there's going to be a flight to safety, and those things are usually gold in the U.S. Treasury. So, and this is historically, every time there's a war, there's a flight to safety. So people are gonna want to go to the safe haven asset, and that's gold. So as you could see here, gold is slowly creeping its way back to previous all-time high. And the previous all-time high was obviously a couple months ago in January, and it hit the high of 5,600 bucks. And yeah, this is just on a closing basis. Last month it closed a higher high on a closing basis, and this month, it's still early to go, but it definitely looks like it's on track to close a positive month, a green month as well, right? If we look at it from a quarterly basis, this looks very, very, very bullish. And if you've seen some of my previous videos where I talk about how silver tops first and then gold goes on to makes its higher or its all-time high later on after silver already made its high. So as of right now, that is playing out. We will see how this continues to evolve, especially with the situation over there in the Middle East. Let's take a quick look at silver. Let's look at the monthly. Yeah, the monthly right now is a little red. It's opened up red today. I guess the first official trading day for silver. It's a little bit red. It's super early. I do see it stalling out at 100 bucks, but it's so high to this. It's so close to the 100 mark right now that maybe it could get a little bit higher. But I'm gonna stick to my guns with this one, and I'm going to go with silver is going to create a lower high. It's not going to get back to the all-time high, although maybe it's going to be, this still looks pretty bullish, right? But I'm going to stick with my guns. If I'm wrong, I'm wrong. But as of right now, I don't think silver is going to make it all the way back to 121 bucks. But I hope I'm wrong about that because I actually have some silver. But we'll see. I'm going to stick with history on this one. Silver tops first, then gold goes on to make its higher high, while silver goes and creates a lower high. So we'll see if that plays out in the next couple of months. But with the situation over there, maybe they're both going to rally to all-time highs, but we'll see. And yeah, and then the last thing is I wanted to talk about was U.S. Treasuries during times of war are safe haven assets that people want to, put their money at, right? Somewhere where it's safe. And when this happens, it causes the price of each individual bond to go up, right? Because there's going to be higher demand for those bonds or treasuries, etc. And that has an inverse relationship on the yield. So when the prices of the bonds go up, yields go down. So we should expect that to happen in the next couple of months if this is to go on into the long term, this war. Hopefully not. I really hope it doesn't go on into the long term, but if it does, then we should see the yields start to drop slowly, or maybe it's all at one time. I don't know, but I've actually never really tracked this in real time, so it'll be interesting to see how this plays out. But well, this is something that we're going to be monitoring here, the 1 year U.S. Treasury. And that's all I have for today. Again, if you're liking the content, please drop a subscribe to the channel and drop a like in the video, and I'll see you guys next time. Take care. Bye.